digital banking, of course, is a very hot topic across Asia, with digital banking licenses in Singapore, in Hong Kong, and in Taiwan. And so the reason that we're here today is that Deloitte has published a digital banking benchmarking study. And so that's what we want to talk about today. I found it interesting for two reasons. One, obviously, having a global organization taking a very holistic approach, but then also the whole digital banking discussion very often, right? It's lots of soft factors in there and opinions. And with the study also trying to quantify this and substantiate it with data. And it's much more meaningful discussion when you actually can compare data points on specific vectors. So to start with, maybe explain, please, a bit about what the study is. It's been the fourth year, I think, that it's been run, and the scope and the approach to this study, if you don't mind.
Yeah, so correct. It's the fourth time we're running it, and we run it every 2 years. And this year it indeed went global. It started actually in Poland, and then we expanded the second time around to Europe, and then we went semi-global the third time, and this time we went really global with the report. So we have 39 countries involved, 318 banks globally, and the report went through over 1,100 different functionalities, which are accessible in what we call 3 channels. So one in the mobile channel, and then 2 in the internet channel. So one, which is the channel which is publicly available information, and then the third channel online would be the when someone logs into an account, what kind of functionalities and information is available. And we did it through kind of expert mystery shoppers. So people who were trained went through specific paths and went and checked those 1,100 functionalities across the full, should I say, customer experience. So from account opening, so starting with, kind of what's information is available publicly, then actually opening account, checking all the different features available, cross-sell, beyond banking type functionalities, and then till account closing. And then the second, piece of the study was actually a UX view. So this was some of the feedback that we got in the past, that how, and we then collected a team that would check 30 specific scenarios in the banks, and made an assessment for how easy it was to navigate and how fluid it was to navigate those 30 key, should I say, steps within each of the within the banks. So we basically come out with double assessment functionalities and UX.
And so, what were the headline findings of that study?
Let me start with, we had the kind of the pleasure or the luck or that we did the study during COVID. So I think, let me just address the first thing that we noticed, so we could then see, what did banks do as a result of COVID. And it was actually very surprising to see that they did a lot. And COVID really acted as an accelerator for digital improvements, digital development. We noticed that 60% of the banks globally somehow restricted their physical presence, physical network, either closing branches outright or strongly reducing opening hours, or forcing people, if they want to go to a branch physically, they need to set up an appointment. So that was kind of an immediate thing that we saw. And then they supplemented that with some digital functionalities. One was that they instantly, 40% of the banks increased the limit on contactless payments. So basically allowing customers to more fluidly move away from cash. Kind of remarkably, a third of the banks, around 34%, suddenly implemented fully digital processes, which before they didn't do. So just in a very rapid time, I think a lot of developments and things that they were still working on, they were able to kind of force through and deliver to customers in a very short period of time. And then there were a lot of other functionalities which banks added, like making appointments online for the branches and things like this. And then past COVID, maybe I could respond to what were the other findings. I think that first of all, banks have moved away from the kind of bread and butter. So most banks globally have figured out that, how to open an account remotely, how to do the fundamentals, of course, of checking balances, of doing transfers, of maybe simple credits, cash loans, which are needed. And where we see, and that's kind of basically expected by customers. What we are seeing now banks focusing on is areas around much deeper cross-sell of products. So around bank assurance, around different complementary investment products, credit products, that's one area. And then also this second area is focusing on things beyond banking. So what else can be done with when you have a client already accessing your accounts. And this is, I think, an interesting development and very diverse geographically. Yeah, so it's the things, it's not like something that works in Singapore will work elsewhere, right? So it's we see very specific things which banks are doing to expand that relationship. And essentially what they're doing is they're leveraging the trust and the security that clients have by entering an application. And once the organization, so the bank, knows that is you, and that's essentially confirmed because they have to do that, right? And if you can transfer money out of your account, then obviously they need to make sure that system is robust. It kind of opens the avenue for different ways of interacting. And one interesting development we see, for instance, as an example, is the governments are saying, okay, well, if you're accessing the government for certain services, you can actually, in certain countries, do that via your bank account as a way to have a trusted, so that the government knows that that's you. Yeah, if I can add. So this, should I say, area of competitiveness which we see is moving towards these sorts of services. And I think then the open question is how to monetize those types of services. And banks obviously are thinking about that. But I think they're also patient, right? That they say, look, if we can get more share of time, more trust, we'll first of all have a much loyal customer, and then over time we'll worry about exactly how we think about monetizing that relationship. And just one statistic we do see is that globally, the amount of time customers are spending with banks is growing. So if you think of all the things that distract us, take away from our time, our daily time, right? I don't know, of course, Netflix and the internet, and we have our obvious personal life, and we have work. So there's many forces, right, fighting for our attention now more than probably ever in history. And banks are increasing their share of time that they take from us. And I think this is a very good news for the banking sector.